What's up, guys? Give me a sound check real quick, and we'll get started. Let me just move this. That's kind of weird. I'll leave it. Loud and clear. Sound is good. How's the background noise? Weird playlist. I was outside of the room for a second, and it switched from like lo-fi beats to what sounded like some kind of classical, and now back to something more modern. Sound is good, cool, loud and clear. Second lunch break, nice. All right, so let me switch the screen. It's not lined up, but. All right, cool. Good morning, everybody. Thanks for joining. It's been a while. Haven't been on stream in a bit. Let me get rid of this chat box because I don't think it's showing up. Maybe I could change the background of it. I changed the chat box. We'll get rid of it actually. Yeah, it's been a while. Haven't streamed in a bit. Hopefully everybody is doing well. Let me say hi to some friends. Samurai, what's up, bud? Some nice guitars you got there. Doc, what's up, man? Doc, I was on the Peloton yesterday. I haven't gotten a bike yet, but when I do, I will absolutely let you know. Christian, this stream will actually be recorded, so it's on YouTube. It's not on Twitch this time. Trader, Elijah, Mike, Charles, Himansu, what's up? Restless, Potato, Thomas, EM3, Ryan's good name. Means little king. I don't know about the little part though. Subs. I'm just going through the chat real quick. Thanks, man. Trader X, I appreciate that. Yeah, I guess normal as in like married, homeowner, working professional, hobbies. Yeah, I think I qualify as standard normal. Not standard, but no, Radex, we can't do that. Amphetamines are useful in small quantities, but only when prescribed by the oversight of a doctor or clinician. I don't even drink, so it says a lot about me. Brian Cornholio, what's up? Santosh, Subikan. Yeah, but it's an amphetamine. Anyway, so yeah, let's if you want to talk about guitars real quick, let's see if I think you might be able to see my guitar if I actually just clear up the background a little bit. So that's it. That is the Mitchell Mahogany. Haven't played it much since I got it, but I intend on it. All right, I don't know why I blur the background out if I'm just gonna unblur it, and then I think it's nicer when things are in focus. But let's get to it. All right, so back to the main screen. I haven't streamed in a little bit, so I might be a little bit crusty, a little bit rusty, a little bit crusty. I'll do my best. I have my stage anxiety right now. I'm just messing around. But all right, so before we get into anything, just some of the formalities aside. So I said hi to a bunch of you. If I missed you, don't take it personal. I'm saying hi in spirit. Formalities, right? None of this is financial advice. right? This is strictly for entertainment purposes only. I had a hoodie on just a second ago that was a black hoodie that said that. Let's get me on here real quick. I don't know why I would have my video and then shrink myself down, get rid of myself. Let's keep it personal. I had a black hoodie on that said that I had printed on it, nothing that I say is financial advice, but unfortunately, I think my wife, God bless her, had the heat cranked up a little bit too much on the dryer. So it was very tight. I couldn't breathe. But anyway, none of this is financial advice. You'll see that this is on YouTube. So there will be some links below. We are partners with Phemex Exchange. So really quickly, we'll just take a look at this exchange. They've added a ton of different features and a ton of different pairs. It's about time that they did. They have over 200 pairs now. They have futures, they have spot, they offer yield. So they offer, I believe, 11% APR or APY. And I know what they're integrating within the next month, and it should be a great addition. A couple other exchanges offer it as well. Mouth is sealed until that is released. But it's a great exchange, and if you use the link below, you do get access to a welcome bonus. And they are currently running a bunch of features and promotions, as many exchanges do. It's an exchange you can trust. They have a phenomenal team, a bunch of professionals, and they offer great service. And it's a very reliable exchange, and now it is on par with Bybit, Deribit, and all of the other, top 5 exchanges with regard to liquidity and volume. So you'll find the link below. It is Phemex.trade. And we have been partners with them for 2 years, so this is nothing new. All right, so Doc, I see real quick, you said, what happened to the stash? So short story, I've had a beard for as long as I could remember, a longer beard, always pretty manicured, nothing like no Duck Dynasty kind of beard. But I told my wife like 2 weeks ago, I said, you know what I'm going to do? I'm going to wear a mustache. I'm going to rock a mustache for like a week. I'm going to shave everything, leave a mustache. It's kind of embarrassing. It looked a little funny. I looked like a sort of 70s or 80s baseball player. It's what I think of when I think of like, baseball cards as a kid. The baseball player with the bushy hair and the bushy mustache, and that's it. Maybe that's because that's what my dad looked like, and he was a ball player. But I've been busy the last 2 weeks. I've had to go to 2, 1 funeral, 2 wakes. So 2 people passed away. I appreciate you guys, saying condolences and all that. No one very close, but still, pay your respects. So I've been busy. I had a mustache for a little bit. I finally sort of evened it out, cut it down, let this grow, and then we'll get back to my normal self. All right, so we're gonna take a look at BTC first. As always, this is gonna be, pretty casual. It's not gonna be Cred and the Duck have a great stream. I think it's on Fridays or Mondays, casual Fridays. We're gonna keep it casual, right? Not stealing their language, but it's going to be an AMA. We're going to take a look at BTC. We're going to talk about, what's taking place in crypto, legacy. If you guys have any questions, always feel free to ask. I'll try to get to as many of them as possible. And we'll wrap it up. And we won't be too long because I have a tea time today. So my first round of golf for the year. All right, so we'll look at BTC. The first thing I want to look at is a high time frame. So we're going to be looking at, this is Bitcoin on a 1-minute chart, so that's not exactly the high time frame, but just zoom out a bit. This is something I don't want to go over for more than a minute or two. Just high time frame structure, still within now it's over a year that we're within a range. Didn't get the full extent of a move towards the low portion of this range, possibly yet, right? Remains to be seen. But what we've been within for the last quarter is a fairly evenly distributed range more locally. So what I want to do is really just focus on where we've been for the past year. I think that all the flow, all the positioning is relevant when it's more recent, right? It doesn't really make sense to zoom out and talk about like higher time frame levels that we haven't even interacted with in 6 months to a year, and that we probably won't be interacting with for quite some time. So high time frame BTC. So I'm just going to put on this right here, but we're going to set this to month. We're going to set this to 3. This is a new feature on TradingView. It's about time that they added some more of these useful volume profiles. They had volume profile, but they didn't have anything that was customizable, or rather that had different settings. So now you could go on TradingView, and VPPV is it's a volume profile, and you could change the period, right? So right now I have it set to one profile every 3 months, and this would be ultimately, this is going to show us what our quarterly volume distribution was. And I'm looking at Coinbase, but I want to look at the leading exchange, right? In terms of volume, in terms of open interest, you're not going to see that there's much of a difference when you go from like Coinbase to Binance, but there are definitely exchanges that lead in terms of price discovery, or rather that where we see most of the fuel accumulate, that's responsible for some of the more significant moves. So what happens on Binance it is something that is worth prioritizing. Again, you're not going to see a big difference, but if you're looking at a volume profile from exchange to exchange, you will have slight differences. And if you're looking at like a nothing exchange, if you're looking at like it was called BitMax, but now it's something else, or if you're looking at like a KuCoin, and you're looking at BTC and you're looking at a volume profile for that exchange, you're going to get a profile that might not correspond to any other BTC pair on any other exchange, because it's just you could have some anomalous behavior that shows up there that is different from other distributions on other exchanges. So I like to focus on the leading exchange, and this is where I look for to prioritize flow also, although I said that I keep Bybit up there pretty high on the totem pole as well. All right, so what we're looking at right here is the last 3-month or quarterly profile, and you can see that the range is pretty nicely encapsulated by our value area high and value area low. And what I mean is, like, if you took this profile off and we were just kind of eyeball this, it's pretty obvious that this is a multi-month range. You have a couple periods where you might call these deviations, or you had these larger extensions, although this is in the beginning, so you wouldn't even consider that. But for the most part, we've spent most of our time between 45 and like 36.6, 37 region, right? So these are the areas where I would expect major change to occur, or where I would look for major change to occur, or for more of the same to occur, right? So for example, if we were stuck within this range for 3 months, right, and we're looking at the value area high, but what I want to do is put on give me 1 sec, I'm going to put on a composite, because you'll see that the composite is obviously, because TPO, time price opportunity, is going to be more in line with market structure from a price standpoint. So I'm going to put on space-time profile composites from the same area going up to where we are, but you'll see how that will slightly adjust. It didn't adjust much, honestly. I thought it was going to adjust more. So that's good. So the volume profile and the TPO are in relative agreement. If you move it forward a little bit more, you'll see how this slightly shifts down. Right, you have a difference in the distribution right here. What I'm talking about is this high volume node compared to sort of that lower high volume node on the TPO. Those are really complementary, actually, so not the best example. So anyway, market structure though, we're back within this multi-month range, right? And the area where we found support was the highest volume region within that structure. So the point of control, the POC, POC, this is where most of the volume for the entire structure occurred. So where most of the transactions took place. And that is right around, 38, 9, 39, 40 region. And if you remember when we were talking about this breaking down, accepting back within the structure, the area that I said I would begin to look for longs potentially would be right around this region. And it would only be after all these lows were taken, right? Because the idea is, you have a multi-month range. This is your, extension leading to this poke up. But this move is not exactly something that has like a substantial base built. And it was a very sort of free riding structure in that longs, if you look at this on a 12-hour, if you look at it on a 4-hour, really most time frames, longs were given a pretty painless ride. So like trailing stops, that's what I mean, right? So you had a series of marginally higher lows. They were uninterrupted, and it just becomes very likely that when you break back within a structure like this, and this is the move that preceded the break, that this is not going to act like any kind of meaningful or adequate support once you fall back within this structure. So once you fall back within the range, it's likely that what you do is sort of fall back into the same ranging behavior, and you look from the low, or in this case the high, to the low for plays. You look at the middle of the range, but you could really build up a stronger case for maybe shorting the break, maybe getting a little bit more aggressive when you do have a structure that was the last structure leading to the break that is built like this. Just because just think about it in the sense that, this is something we've gone over like countless times, but it's my first stream in a long time. Stops. It's like it's a minefield almost, right? It's very easy for one set of stops to trigger and then carry to the next, and you get sort of those cascading liquidations. So now we're back within the structure. The most, significant area that we need to overcome, right? Because the first area that we're running into right now is the most logical resistance locally, right? This little consolidation that we formed after falling back within the range. So now we're bouncing off that right now, okay? High volume node region. The most significant area for bulls that I guess would be the most meaningful would be if we were able to form support back above 45, right? And remember, like, never take my drawing seriously. Who does a really good job of drawing like the way price action, or how they think price action is going to evolve? Trader SZ. But I'm just trying to convey the idea of, squigglies above, acceptance above. If we're back above 45, it just becomes very unlikely that this structure, right, this failed auction up here, happens again. So the point being, and you have a lot of people right now on the timeline that are looking at this structure as sort of a bear flag. So if you look at this and you have this sort of channel, although I think that horizontals are most important, this is your bear flag, right? And then what it should do is it now should no longer come back above one of the prior highs, right? What it should do is continue to break down from here, and you should have sort of a measured move down from this leg, this flag, and then another leg. TA 101 stuff, not really a fan of it though. Patterns, all of that, I think it's mostly garbage. So 45, I think you're above 45, and it's clear that at that point we're going much higher, or rather that it's just very unlikely that we have another failure around 48. If we begin to lose these lows, I think that we're pulling back more honestly either way. I don't think that this is, I think that this is, as I said yesterday, I'll get into it, when we get back down to the lower time frames. I think we see more of a pullback. If we were to lose these lows, we're just going to look back down here, right? It's the next logical area to look. It's an area that's probably ripe with liquidity. I would want to see that in this region that we see, hopefully a significant amount of liquidations, a significant amount of stops ran before getting involved and saying that this is a support worth buying. Knife catching on the lower time frames and getting in and out is one thing, but if we were to break back down to these lows, at that point you are sort of validating the bearish argument much further, and it's possible that you see, a significant amount of sell pressure and supply come into the market as people panic. Oh, these are not the lows. Clearly the lows are back down here, and it would be easy for us at this point to, accept below these lows and see a further breakdown back down to the low 30s. And I think that honestly would happen. Like, for example, I think that this has to sort of maintain for the bulls to really have a significant argument. As long as it's a little bit more obvious now, but as long as we sort of maintain this pattern of progression or rate of acceleration over time with these higher lows, I think there's a neutral case to be made. Not neutral, but I am neutral because we're back within a range. But at least, like, you can't be slamming the sell button yet. Whereas if you lose these lows, and if we were to break back down towards these lows down here, I think that, again, it's possible that we bounce back down around 36.5, right? So our value area low of the structure, the quarterly range. But I think that it's more likely that we see, bids get yanked and buyers get inundated with sell pressure, and this move much lower at that point. And then at that point, it looks a lot more obvious. As I've said before in the past, if you have a range on the low time frame, on the high time frame, and you've already established sort of these deviation high lows, you've taken the highs and lows, at that point I go with the side that breaks, right? So if we're back in sort of dead center and we have significant moves at the highs and at the lows, if we're going to break down now again further, I don't think that this is a dip that you just stand in front of, put it that way. That's why I said, I would need to be in front of this. I mean, the likelihood of that happening because I'm in front of the computer all the time is pretty high. But I would need to see a significant amount of liquidations occur, the bid remain, at that point, about to say significant back to back, there we go. The bid remain firm, spot not stepping out of the way. A lot of things would need to align for this to be something to just sort of reflexively get behind. Because as I said, at that point, you've had a multi-month range, a quarterly profile built, failed auction at the high, for accepting back down at the low, you're just looking much lower. So locally, high time frame aside, let's go to the last few days just to go over, I don't really like to go over sort of what has happened for too long. It's hindsight, right? But you had a multi-day period of inside day structures. So if you're looking at this, it might be a little bit messy with everything on the chart. But what you have is two double distributions. So double distribution, gap left, balance found, accepted back within that gap. So really, here's your two double distributions. You have one day inside of that. You have another day inside of that. And then this was building as basically the one, this is the 1, 2, 3, 4th inside day. And inside day structures are basically breaks from balance based on candlestick highs and lows. And what you're doing is, it's basically like a Russian doll structure, right? It's not too early to say anything about Russia or Russian dolls, but what you're doing is compressing over time, and your trigger is the last day high and low. And a lot of times what you're looking for is basically a move to the prior day's high or low. I like to consider, the next sticky area. So here is the day that followed within the structure. You have one break outside of that low that accepts back within, but then we have another move back down towards the low that ultimately tags the prior days, or the third day back, the second day back, the lows earlier from those two double distributions. The idea is that when you have balance like this building and compressing, that at some point it's only going to take a little to get price moving a lot. So you had a break below the lows And we saw, because this is an area now that the market has been kind of dry, nothing happening, starved, and starved for volatility and appetite to put on any kind of risk. So when you finally do get that break, so right here, if we're looking at Binance, let me get rid of this. You'll see that the market really jumped on that move, right? So it looks like, we're zoomed out on a 4-hour chart now. Here's our flag. Oh, we finally break after that, 4 or 5 day period of balance. This has to be going much lower. So what happens is when you break down into that low, you see a significant increase in open interest on the way down. So just a lot of risk committed after the fact, right? And on Binance and on FTX, and very clearly on Bybit, there was a significant delta divergence. So if we go to, for example, I'll just go to the CVDs for Bybit for that day. What we'll do is we will eliminate the spot CVD, eliminate funding. We will we'll leave open interest. These are liquidations. But right now, this is sounds like a package that delivered. You'll see. This should have been saved this way. But so here are the lows. You have a series of, and this is what I'm using CVD for. It's for local activity. It's not for the 1 minute chart. I mean, you could, but it's really for what's happened over the course of maybe a session. So you have a series of higher lows. So you have that big break, right? So mind you, what's happened into this low, you have a big break, you have open interest at this point, the velocity of open interest, right? So how much open interest is changing with respect to previous changes in open interest. You have that increasing dramatically into this low, and then after this is formed and is slightly grinding up, if you look at futures, you have a lower low that is formed, right? So I'm just looking at price right now. You have a lower low that is formed on CVD. So what this is showing you is that there is a lot more selling that has come in on the right side of the structure. So just right here. So we'll put on, that is the 5 minute chart, so that's okay. On the right side of that structure, you have a lot more selling that comes in, and you can see what happened during that period, open interest drastically increasing. So this open interest increase this is 4,000 BTC across multiple exchanges. But if you were to isolate this just to like Binance, you're looking at around, what is that, 3,000 BTC, which to convert that obviously to dollars is, you're looking at 200 million, 150 million. Is that the math? I got to double check that because that back of the envelope math isn't, I've only had 1 can of cold brew coffee today. So what was that? That was at, yeah, all right, so roughly. So significant increase in risk added on down here late, right? So meaning sellers were caught off sides, and there was more selling that come in on the right side of that structure, but yet price had done what? It hadn't broken down further. So, I mean, honestly, if you have more selling coming in than previously in the process of a move down, it indicates that there is someone that at that point is stepping in the way. And even though that selling is coming in, price is not able to make a lower low. So complete reversal. Again, I feel like I'm covering a lot of stuff that happened just because I haven't streamed in a while. This kind of structure, so a very balanced structure. You see this happen all the time. You'll have a false break. You'll trap a bunch of sellers. What you want to see after this, if you're going to make the case for sort of buying higher, maybe looking for a short-term reversal, you want to see that the top side of the structure holds, right? So for what was, or rather where value was established for the 4 or 5 days prior, so this very tight range, and the price action was, you could look at price action, you could look at inside day structure, you could look at how value was inside of value. Another thing that was very, was sort of the canary in the coal mine for volatility coming, was how the final day, these 2 days before we had this break, the average 30-minute candle size was 105 points. So sorry, phone call. 105 points for a 30-minute candle. Okay, so the average 30-minute candle leading up to that was 300, 200, 250, 248. You know, we're talking about it's half the size that it normally is, right? So this is an example of like paying attention to norms and seeing when things change. Some people ask me like, how can you tell what volume is worth paying attention to? You know, what movement is worth paying attention to? It's what falls outside of, you know, one standard deviation. Okay, you know, what falls outside of the norms. So if, you know, for example, if a 5-minute rotation is normally, you know, 300 BTC, 250 BTC, well, if you see, you know, a high or a low that's broken and there's 1,000 BTC that comes into that pocket, well, then that's probably that is abnormal, right? That's abnormal volume, and then you can start to build a case around it depending on if there's signs of acceptance or signs of absorption. But a structure like this, so a range that's this clean, breaks down. What you want to see is that the top side of the structure holds, right? Because once this under-over occurs, this is where you're going to begin to look for a trend change. Right? You've had an attempt down, break back to the upside of this structure. The top side of prior value of this composite should hold as support. And since then, and this brings us to where we currently are, finally caught up to today. What we've been looking at as a target, or what I was initially looking at as a target, was these single prints, right? So top side of the structure holds as support. You're looking at a confluence of, you know, location in terms of market structure, so these highs, and a gap that occurred on the way down for this previous trending day that we had that was very one-sided. So just making sure you guys can see it on the screen. Ooh, Charlie horse, the leg is tightening up. So these single prints. So yesterday when we broke up, when we were right here, I posted on Twitter that I think that this is, if not, we have maybe one more push, and then what we see is, and then we begin to see a larger pullback. You know, we started seeing funding go a little bit more positive, derivatives start doing a little bit more of the work, and it's not like, you know, we have a nice consolidation that formed, break up. You're not really getting away though, right? So you have an expansion upward. Now you have a longer consolidation, and then another short expansion upward, and now we're already rolling back into the lows of yesterday, or rather today, but into yesterday's value area high. So I think what you ultimately want to look for, right, is if you're going to maintain sort of a bullish argument, is I think you want to see that at least the 40K handle holds, right? I know that's back within this range that we were talking about, looking at this level as support, but now that time has passed, it's a little bit different, right? If it's the beginning of the move, right? So you have your first. This was just to be completely clear and honest, this was largely a short squeeze. And since this short squeeze, it's not like we have a lot more shorts that are really getting tested, which is, you know, if you're looking for a move to continue, you do want to see that shorts are continuously getting squeezed. It's not like you don't want to see that be sort of the impetus behind the move. But if you have a short squeeze like this, and then the next moves up aren't really bringing about any kind of significant short squeeze, well, then it's possible that any sellers at that point are positioned much better and much higher, and that you have to actually, you know, grind your way up at that point. But after we had the break of this structure, right, you would be expecting a more shallow pullback, right? So that's why you look at the tops or the highs of this previous range, right? So the composite value area high, the highs, you know, high of days. You're just looking at sort of the most shallow possible pullback to hold if you're really going to make a bullish argument. You know, the last thing you would have wanted was for this to start accepting back within this prior range already, right? Because then what you have is you probably have a structure that, you know, melts back down. You've seen it happen many times before. You have a squeeze up, and then it kind of just peters out. But now that we've had sort of 2 days of value migration into a significant resistance, right? So previous week's high. So again, we'll just turn off some of these levels. Right, so just to go with the basics. So our gap is here. So single print gap is there. Range high is there. Okay. And now you had to move back up to that level, beginning to compress, right? So you have extension, but again, you have longer consolidation than you do extension. So in a strong trend, what you want to see is what? You want to see brief consolidation, long trending leg, brief consolidation, smaller consolidation, then a lot of the times you'll have some type of parabolic blow off. You don't want to see like a big move up, consolidation, smaller move up, longer consolidation, and then again, sort of both of these moves are relatively even. But either way, it doesn't matter. It's not a big deal. But the point is that it was petering out into a level where you would expect from a sort of risk reward standpoint would be a good area to sell. So let me just put back those levels right now real quick. Well, what we'll do is we'll change up the screen. And I'll show you where you're looking, or rather where I'm looking. So this is the reversal day. I wouldn't normally combine days like this where you don't have significant amount of overlap, but I think that since this is a structure that's going to be pulling back, it makes sense to, from a local standpoint, identify where the high volume nodes are within the structure. So you can combine this, right? So normally if I'm combining structures, it's when you have something like this, where you have value, value, value. These are inside days period, but you have a ton of value overlap, right? Then you could begin to build a case for breaks from balance, price being clearly, once you have the beginning of value overlap, price being more range bound. But I traditionally won't combine profiles if we have expansion and value migration. So this value completely outside of that value, this value for the most part completely outside of value. But for the sake of identifying, the significant levels on this chart, I think it's actually worth doing. So I think 40K is the level you want to see, the lowest possible level you would want to see this break down if price is going to continue to move higher. Okay, so you have two high volume nodes, right? And then you have this big drop off down here. And we know, this market likes round numbers. And those lows from those days would probably get ran, right? So if we were just expand this, here are the lows right around 40,500. But in all honesty, what normally would happen after two structures that are built like this, right? So consolidation, move up, but a very local consolidation. After you have this type of rollover, you usually get a cascade that what? It might not occur right now, but if these lows are going to be tapped, it's usually going to be something that spills back into, usually you would expect like single prints to be tapped or, more of a gap to be filled. But I think 40K is a good level to look at. Right? This is the sort of final roll right here. Expansion upward, lows of that prior range. It's not the case that it necessarily needs to hold the high of that range for this to be bullish, or rather, I guess a better way to put it is it's unrealistic to expect that if this were to roll now, that we would continue to hold the higher structures and not expect something that's more, more of a flush. Let me just switch this up. I'm going to get me off of there because I think that's enough. So yeah, the idea is you're melting into these lows right now. At this point, you're probably going to fill out that trending period. And I would just expect that over time, we're going to come back down to this region. So this is a weekly profile right now, last 2 days. And then what you would be looking for is ultimately some type of composite to build. some type of range to build between 42 and 40K. And maybe we, you know, auction here within the next few days. But if we were to break down now below that, so let's say we were to break down below 40 and accept back within here, so meaning we splash into 40, it's not one of these, you know, splash and then immediate responses. Ultimately what you want to see is if these lows are broken, there's a very quick response, right? The market is not accepted there. You know, what that would look like in a TPO is, let's say, you know, we're in the process of a trend day and we have a TPO and it looks somewhat like this, right? A long tail. What you don't want to see is we go down here and let's say build down here, something flat. And we're hanging out below these lows. I mean, just to make it clear, this level should offer a very quick response. It probably will go as low as 40 because you'll probably get some kind of wick. But if you spend any amount of time in here beyond that, right, beyond an immediate response by buyers, it's more than likely that you're just going to cover that gap and come back down towards these lows. Right? It wouldn't make sense at that point to remain, you know, if you're bullish at that point, at least in the interim for this flip, it wouldn't make sense to continue to maintain sort of a bullish bias in the near term. Because then the picture looks at that point a little bit more grim, right? If we just get rid of these days, then you have more of like, okay, so this was your weekly balance profile. Then you have a sort of a deviation, failed auction at the high. If you're coming back down to test this low, it goes back to the same argument we just made about ranges and double taps on either side and then picking a side, right? So you have a range, high, low established, you know, it's not like that. It's more like you have a range, one tap, price bounces a few times between here, deviation, and then at some point you're picking a side. If after this we're back down towards this low, then at that point, yeah, it's back to, you know, back to the drawing board and back to looking down, you know, at lower prices. Does all make sense? And again, so this move up right now, I think it is getting more long dominated, and we're not really seeing any kind of, as we moved up, it's not like we saw any kind of significant short squeezes. You know, they're kind of drying up. Put the funding back. There you go. So funding started shifting a little bit more positively. I mean, you could see how this transitioned right here. Right, so from this period, so you had a move up, right? Perp and spot CVD moving up. As price began to range, this is beginning to shift. Predictive funding is beginning to go back towards, you know, going a little bit more positive. No real short squeezes that you know could be found up here, and now it's like longs are the ones getting caught off sides. I'm just going to go through the chat real quick. So you could tell it's a short squeeze when, I'll show you in a second what it looks like. Initial balances, it is useful. There are people that create entire strategies around trading the initial balance. So what a short squeeze looks like is right here. So you see how at these lows we have a significant increase in open interest. Okay, on the way down, you have that occurring. Right? Except at this point, you have longs liquidated, and now you're transitioning and you have a short squeeze right here. So open interest increasing, funding negative. You have a delta divergence that occurred right there. I know the ink is really big, but you guys should, I think you remember what I just went over 15 minutes ago. 1 sec, I'll see if I can make it smaller. Just roll the wheel. So here's the period where the delta divergence occurred. Now there are some times when there are delta divergences and they're not useful, right? They might just be leading. So that's why you want to see extreme cases of it, right? And shared across exchanges, not like, something where it's like an idiosyncrasy, or just something that's kind of one-off on one exchange and it's not for any kind of meaningful amount of money or meaningful amount of contracts. This was FTX, Binance, and Bybit. Delta divergence, open interest increasing, right? You have a big increase in open interest, and then when you get the squeeze, you get those big drops, right? So what you're seeing with the squeeze is you'll see that open interest will, as price moves up, open interest will drop. And the only time you wouldn't see that is if like price was squeezing upward, and at that time, fresh shorts were filling. And there's cases where it might not be as drastic, but for the most part, you're going to look for upward prices and drops in open interest. And if we go back, just to give you an idea of, like if we look at open interest now on the high time frame, here comes the squeeze. This is good. I'm going to get rid of these for a second. I know my chart's saved, so it's all right. But just for the sake of cleaning this up and just leaving open interest on. I'll put all these. Oh no, I don't want to put them all. I want to put on. Sorry, 1 sec. So here's your short squeeze, right? Locally, big drop in OI. OI is still relatively elevated, but if you look at where it began to really increase, I never go too far back when looking at open interest or even looking at anything that is, where the fuck did that go? That is flow related. I think that you have to prioritize recency just because there's a lot of turnover in this market. It's not like someone who got into position months ago is necessarily still going to be hanging on to that position. So if you look at where most of the increase in open interest occurred, it's in that move down, right? So we got that squeeze. It's in this move right here, but that's already rolled over. But larger than that, this level from like 45 is where risk was really, from, if we're just looking at what has changed more recently. As prices move down, the big increase in open interest came from up here. So since the beginning of April, so if we have moved up so far, so we've gotten to this point, and this is still, right, we're still above all that, it's just likely that people who are, if they're, net short at this point or hedged, or they're still in good, comfortable position. There's no real reason for them to overthink their position or exit their position. They're not pressured to exit their position. They're not forced seller. So really, until we got up to that 45 level, to where really most of this began, that's why 45 is so significant also, right? Because not only is it the idea is that we would be back returning to a level, the top side of, value area high of a prior range. Ooh, you like that work? That worked out. The A dragged, and I just used that to make the H. So not only would that be a structurally significant level, but from a risk standpoint, so from where most of the risk was added on, it would be very significant as well. So let's say we grind our way up to 45. If we start pressing through there, it's possible that we see a much larger short squeeze than what we had down here, right? Which is kind of nothing. And I mean, if we go back to 45, right, and we place like anchored VWAP, and we'll place it from see, is that, how does this anchor VWAP work? I'll use anchor VWAP on EXO. All right, so ready, set, where is it? No, there we go. So from this break, okay, so this is where VWAP is, but most of the open interest occurred, right? Most of the open interest is comfortable above there. So until we start getting, you know, I think, I don't even want to say like a level, because until we're really up there, there's really no discomfort by sellers. That's the way I'm thinking right now. I don't think that we're in a position to see a much larger squeeze because we haven't had one yet. Oh, and I was referencing the Binance delta divergence, so we might as well just point that out real quick. What is this doing? How many days? There we go, we'll do 7 days. So if you look at Binance CVD, here's your price, right? And your CVD is just doing something much more extreme than that. Open interest going up. All right, so you guys have any questions? Coinalyze, yes. No, I don't really use moving averages. I'll look at it at 20 period occasionally. I'll throw on the higher time frame moving averages occasionally if I'm like zooming out and trying to get a big picture idea. But no, I rarely have them on. The 20 period is good though. It's your center Bollinger line. I wouldn't get too aggressive in alts right now. There's some strong alts across the board. Notably, FXS has been strong again. Maple has been strong. I sold Maple, I think at $11. No. I sold Maple. No, never mind. I sold Maple, most of my Maple down here. But there is some, I guess, idiosyncratic strength. But I would just be careful because BTC, you know, BTC is responding to the ES, trading with Legacy still. You know, Legacy had we've seen a significant break. So we've had, if we just look at the weekly TPO, the weekly profile. So we've had sort of a break from balance at these lows. Similar structure to BTC. So we're looking for, you know, possibly some kind of cleanup into this gap. Same idea with Bitcoin. Zooming out though, I mean, there's been a lot of sort of bearishness across the board. And I think one of the more important details was when Bullard was talking the other day about 75 basis points and how many rate hikes. It was all hawkish, but the market responded positively. So that's a pretty good indication of positioning, or rather how most of the market has, significant amount of the market has sold or is already sidelined or short. So the only thing left is really for sellers to buy back or to buy in. And there's not a whole lot of there just hasn't been really much positivity across the board at all. So the fact that the market responded positively to negative news, that's always something that really should, I think, be on your radar when it occurs. But today, we're back to, and it's not like we really broke from it tremendously. Correlation is still in effect. So BTC much higher beta, but this is beta right here. If you just look at how price responds, right? It's giving you actually the upside, staying whenever it's sideways, but when we have any move down, Bitcoin is much more responsive to the downside. So always be mindful of that, because that correlation is very strong for the last few months, and it doesn't make sense to really assume that it's just going to turn off overnight. And the S&P, there's no reason why this has to rip up to the all-time high. There's no reason why it has to rip down below 39. What's more likely is that this just continues to range the same way BTC does. And this has happened numerous times before, where it's multi-month ranges. Right? If we go way back, we were between 2000 and 2008. That was a huge range. Well, it's silly to say that, though, because it's like you had a decade long of trending behavior. But the point is, if we look at price now, going back to, let's just say, the beginning of the year, it wouldn't be abnormal for something like 2018 to happen, where even though we grinded our way back up to the highs, we still were kind of range bound, stuck. So I'm out of Solana. I ended up taking a Solana long yesterday. I can't hold alts. I don't like to hold for the accumulation period. I'd much rather join on a trend. I'd much rather, for example, with Solana, join when we're back above something like 115. I was in a long yesterday, anticipating that maybe we reach 116, which was just weekly VWAP. So if we were to put on, not weekly, excuse me, quarterly VWAP. If 105 acts as support, maybe we see it push up again. Near strength is there still. Let's take a look at BTC again, because now we're scooping some lows. Good amount of volume that just came in below that low. So we've just taken these lows right now. And if we look at something like the footprint, you see that you have an imbalance at the low, which is, I ultimately want to see like a cross Binance and a cross Bybit for any kind of lows. I want to see imbalances on both. So you see this red figure right here. I have those set to 10 times imbalances, so 1,000%. So you have a good amount of trap volume down there. It's not like it was. It's shorts opening up though, which is what I prefer to see. This looks like stops ran, and I say that because if you look at open interest, the volume on the left side of the structure, it's a lot of selling, but open interest dropped significantly. So what you probably just did was, you took these longs from these local stops. So I think that from a risk reward standpoint, and where this is just probably going, I'd I'd much rather get involved down here. Now, before the stream, I actually longed right here. I longed at, let's see, my trading history. I don't know why Quantower doesn't show me my trading history. I see Marusha, he has like his trading history and his equity curve on Quantower, but I can't see mine. Well, either way, I ended up closing it out at I ended up closing it out just under 41.7. Or that's where I had rather limits set. And I marketed into this one. But I don't think that I'd rather, if I was going to, you know, add sort of a longer intraday swing or look for one, it would be after these lows are taken. And just to go over something the other day, I talked about this low down here. So that low has no shadow, right? It has no wick. Okay. You've heard me say this countless times with the daily and the weekly. It's basically the same idea. It's just if you look back and you could backtest a lot of things just visually very, very quickly. It's very rare that we leave a candle on the 4-hour, the daily, the weekly, without any kind of wick, right? And this was, you had a wick here, you had a transition upward, but we opened, moved up, and since then never returned back to that low. If this was a daily or a weekly, I would give it a much higher probability of being swept faster. This ended up getting away, so it's not necessarily the case that it has to come back there, but it's a similar idea to poor highs and poor lows. And just to look at sort of what we have locally in terms of just TPO structure, this high, there's no excess at this high, so this is kind of a poor high. So we had slight excess here, so what that means is it was rejected, right? Sellers, a selling tail, not much of a tail, but it's a good high. No excess here. This is a poor high. Now, 9 times out of 10, when lows form, you're going to have excess. So when we made these lows back here, if you guys remember on Twitter, I said the low is not in until these are swept, or the low to get behind. I'd much rather see this. So this kind of tail, and then we ended up getting it, right? So I got in an argument with someone on Twitter. I ended up bookmarking their tweet like a petty person. And whenever it swept, because they were like, oh, it's never going to go back down there, blah, 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 something to that effect. Whenever it swept, I just tagged them and said, hey, how you doing? They were a good sport about it. It was funny. But excess down at the lows. At the highs, the trouble is a lot of what we've seen just locally is that highs have actually been able to roll over. So just keep this in mind. If you have a poor high or a poor low, it's an area that you should sort of keep on your radar, right? As an area where maybe you might run stops, maybe you might prioritize towards breaking because it hasn't shown any kind of clear rejection yet. So in this case, this is not a really terrible poor high. If it was blunt, if it was flat like that, right? So let's go find an ugly poor high. These are decent highs. This is kind of better right here. Maybe we have one in here, but I've combined them, so. No, I mean, they're poor highs, but there's a poor high right here. You can say with confidence, all right, so you normally don't make the low until we have some kind of buying tail like this, some kind of stop run, some kind of sign of rejection, right? That's one of the more valuable reasons that we use TPO. Shows where the market's accepted, where it's rejected, where value is developing. So the lows, 9 times out of 10, you're going to find them having excess. So for example, so a poor high or poor low. So this is a good low. So see how we have more than 2 TPOs. So we have 1, 2, 3, 4, 5, 6. That's a good low. 2 TPOs or more, good low. Good low, poor low, good low, good low, right? Now obviously from this low to this low, you have a difference, right? And if you're gonna look for a poor high or poor low or signs of rejection, it would make sense for it to be in an area that hasn't been tested and had one already. So for this to occur within the body of a structure, it's not as significant. It's really when you make a low after breaking down out of a structure. So for example, let's say that we broke below this low and we had a blunt low like this forming. So it's in the middle forming, or it even closes out like that. It doesn't even have to be that extreme. It could be like this. So no string of TPOs, no excess at the end, right? I could just use the box structure actually. None of that. If that occurred below a period where we did have that prior, this is going lower because there's no immediate response, right? The areas where we have thinness, that's where the market did not spend a lot of time. It moved rather quickly, one-sidedly, is gap, blah, 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 blah. So we've seen that 9 times out of 10, right? Just kind of riffing with, it might be slightly less, might be slightly higher. This is called a TPO chart. That lows form with that. So when we didn't have one back here, I was waiting for us to get one, wherever that came. You can't really say that with the same level of confidence for the highs though, right? Okay, we've broken outside of this range. We have a reversal. You know, we don't have a high until we have a selling tail at the high. So a profile that looks, you know, something like that. So something that looks like this, thin, right? Thin. You can't really say that necessarily because as we've transitioned off of our all-time high, the market has lost momentum. So it has actually been able to roll over where you had poor highs, and then the market just continued to make new lows. Because that's one thing you could sort of, you could say from a poor high or poor low is actually was just a loss of momentum, right? So we don't have a poor high, so no major rejection yet, but we do have to keep in mind that the market has been able to roll over without returning and cleaning this up and leaving something that was like that, right? Leaving something, you know, just to give you a good picture, so you leave with something good. Leave with something that looks like that, right? And then maybe you could say, let's say we had a period of balance like this. So let's say the next days occur like this, right? We range within here, move down towards this low, blah, blah, blah. And then we get something where we do have a ton of excess up here, and then the market is back down towards this low. Well, then, yeah, definitely you're targeting that low. Finally, you have a sign of rejection, right? The market very briefly was able to move up, but was immediately rejected. Similar idea as Wicks, but a little bit more concrete. And yeah, the one thing you do have to keep in mind is FOMC is 2 weeks from now. So I pay attention to FTX, Binance, and Bybit. I think it makes sense. I think the strongest setups come when you have confirming information coming from all of them, and they are on the same side. I think that there are smaller, like nuanced setups that do occur on Bybit, or historically have occurred on Bybit. But I think it pays to pay attention. I've always said it pays to pay attention to the exchanges that lead in volume and open interest, because they're going to be responsible for most of price discovery and where most of the larger players are trading. I've always said I love Bybit for very specific setups. But now it's like Bybit has actually increased in volume and open interest since that streamer began. And I think that streamer, so Soto is his name maybe? The Korean streamer. I think that he's probably an employee. I think that he's probably delta neutral. So when he's streaming and he's taking a huge loss, I think that he has an opposing position open on another exchange. He's a YouTuber with probably makes a ton of money from subscribers in the ref link, if it weren't the case. Okay, and he's probably building up more subscribers just through that alone. But I think what he's actually done is he's advertised for the exchange in an incredible way. So Bybit open interest has significantly increased. And I've always thought Bybit, but Bybit's Phemex, Bybit, FTX, Binance, all great exchanges. We call a spade though. Binance leads by open interest and volume. I put more emphasis on stablecoin margin perps now. The market has made its decision about that, and as long as most of the volume is being done there, I think it makes sense to focus on that. In the past, it was stablecoins. I'll trade stablecoins if we're in like a ripping, roaring bull market because you want to have access to that like sort of underlying margin upside as well. But coinalyze. Heat maps? No, not really. I mean, I look at trading light for alts. Heat maps are okay. So one thing, heat maps are you can manipulate them easily, right? You can manipulate them easily. There are certain cases where again it's more nuanced and specific, like on Bitfinex. A lot of times those orders have intent to trade. There are a lot of times though that you'll see orders that have no intent to trade and they're just spoofing. So I think when you have confluence between a significant level, right, an area where the market is very interested, it doesn't just have to be based on market structure. It could be based on previous volume done, where open interest came in. Any kind of case that you can make where you add more evidence to that is always good. So if you see something confirming on the heat map as well, that's great. I pay attention to market depth, changes in market depth. It's something that I do look at for higher time frames. But I wouldn't put all of my weight into heat map. You could see how, here, for example, this was pulled, right? Some of this was interacted with, but, if we look at, for example, this is FTX, big bid wall following up, price comes into it, it's pulled, and for what did come into this level, it's not like we saw an increase in open interest. So this person didn't have actually an intention to transact. So what this could have very well been is, this could have been someone spoofing price up to actually get filled in their asks up here, or to spoof this price up, help move the index up and help unload spot, right? Could be a couple things. So I don't focus really. I barely give heat maps any weighting, unless again it's more like anomaly, like it's an anomaly or something that's kind of one off and there's odd behavior to be observed, and those times are few and far between. So, but if you have confluence, it's great. But when it comes to order book depth and the limit order book, most of the depth is actually invisible. So when you're looking at for example, if we go to, so we'll hold on one second. I'll pull something up for you guys. Let me just line this up so it fits nicely. So these are spot. This is the spot tapes. I have to scale this down. It was on a vertical screen. So these are the spot tapes across exchanges. I'm going to switch this, go to books. So this is Coinbase. This is Binance. This is Binance Perp. If we were to just look at order book depth on, say, for example, Coinbase, you see what is advertised, right? This is what is in the limit order book. Might not actually have intention to do business, but a majority of depth is actually invisible. So it might be using icebergs, hidden orders, and that's one thing to consider. So, it's misleading. I guess that's the best way to put it. If I was going to focus on something, it'd be more than anything else probably be Binance or Bybit. FTX is something that I always keep an eye on. It's up there right next to them, but it does have some kind of wonky behavior, and I think it's because of Alameda. Hey, what's up, Ross? Long time. No, Sani, patterns aren't garbage. People acting in concert and doing the same thing over and over again is going to leave footprints and patterns. But I think just taking a pattern at face value and not applying any context, I think that's where it's dangerous. I don't think I think the 4-year cycle is kind of out the window. I think that, after 2020, I've said this, I'm probably going to end the stream after this, by the way, guys. After 2020, a lot of things changed. So anything that was like historical data, or rather any historical data, I don't think is worth paying much attention to, because that was pre-institutional participation. And I think that now that we have a significant amount of institutional participation and different types of buyers in this market, it's going to lead to different results. Maybe less significant drawdowns in BTC. You have the correlation that's in effect. So I think that, if you trade lower timeframes, if you focus on order flow, you see how it's been sort of semi-distorted since 2020. Not in a bad way, but just it's different. And it is a footprint, right? I know I look at footprint charts, but that's not what I mean. I mean, the chart, price action, how price behaves, it's a footprint ultimately of who's walking through the market. And we have different participants now. We're more correlated to legacy. We're more sort of on the main stage. So I don't think that we're going to see sort of 4-year cycles play out the same way they did. I think that Bitcoin largely depends on macro, though. I think it's mostly a risk asset. It's growing in those other narratives, but we have to consider what the most dominant behavior is and give that more weight. And more dominant behavior is that it behaves like a risk asset. I mean, and you look at a 5-second chart with the ES, with BTC, they're the same. Next big project should be, I mean, I feel like it's done on the development side, but now it's just me and Josh. I have to add everything else in. And we posted something a week ago or 2 weeks ago looking for content writers. It's probably not what you think it is. So if you're going to arrive to any conclusions about, looking for content writers, you'd probably be mistaken. But yeah, we'll update you. You'll know when that comes out, right? I'll be posting about it. Bybit does it. Let's see. I don't really see a divergence. I just see longs getting flushed out. So, all right, guys, probably going to wrap it up. Thank you for tuning in. I like doing these streams. I just had a lot of stuff in the last 2 weeks. I had to reschedule the call-in numerous times, but I will post a link for that. Obviously, check out our sponsors at Phemex. It's a phenomenal exchange. No KYC still. You can KYC, and when you do KYC, a lot of exchanges are starting to do this now, where they're allowing you to be on without KYC, but to a certain extent, and it's 2 BTC that you can withdraw. If you do KYC, and it's not a problem KYCing, a lot of things are going that way, you'll get the reduced costs on market orders and other kind of rewards that they offer, and they're offering more competitions for people KYC. But you don't have to KYC. Go on there with an email address, trade as much as you want, withdraw 2 BTC a day, and never have to KYC. So, all right, guys, thanks for tuning in. It's been a pleasure. I'm going to go stretch because my back, I'm old, and my back has been bothering me lately, and I have my first round of golf today, and I'm super excited. I'm so excited that I just said I'm super excited. I mean, I laid out my golf outfit last night like a 5-year-old. Do 5-year-olds lay out the golf outfit? I don't know. All right, guys. Until next time, have a fantastic evening.